This is the MTPredictor weekly update for July 10th. I hope you all had a good holiday last week, and this week quite an interesting week. As you see, into the holiday again, should have been no surprise that the market ran up, as it typically does, into holidays, heading into earnings season. We were in the area of typical wave 3, I think, last time, and then we've now come into the area of the maximum wave 3 up on the daily chart of the Dow here. Let's project our wave 4 down to see where the pullback might come in. So let's use our down wave tool here. I'm selecting down wave 4. Just need to make 2 clicks on the chart here. And here's your wave 4 support area. That'll begin right around 12,420 in the Dow. So we'll look for that. If we do come into that area, your next resistance is still going to have resistance now at 12,000, around 770. Above that, you'll have this DP off this prior swing here, right about 13,000. So this 12,800-ish area here, and then above that 13,000. Then to the downside, again sitting around 12,420. All right, that's the Dow. Let's take a look at the Goldman Sachs that we've been following here. Again, last summer, this same time last summer, June and July, we had the DP support come in, another DP support come in before Goldman went on to make higher highs. Same situation this summer. DP followed by another DP support here. Question is, are we going to rally on to higher highs as we did last year and the prior year during the summer, once we got through the summer? Okay, we'll be watching this in the banking sector in general to see. They've kind of let us down prior to the general market falling, and we're going to see if this area holds support or if this gives way, because we've got a lot of downside if this area, this 120, 130 area, 125, 130 area gives way. So we'll continue to watch that. Again, interesting pattern seasonally for Goldman Sachs the last couple of years. All right, let's check. Let's take a look at gold, silver, and oil. Let's take a look at gold. Okay, you can see we had a major 4-wave pattern. We came into the wave 4 support area here. Once again, those opportunities for long-term investors, 2 to 10 years in gold. Gold has come below the 50-day. This red line here came below the 50-day, but above the 200-day moving average, which has not been broken in at least a couple of years. The pull back into the wave 4 support area here, and now we've moved off that, come back above the 50-day. Here's your next resistance area, this DP resistance. That's off the wave 3 swing. Well, we can put a little kind of minor-ish one just below that. So we're going to have to watch this area in gold. This is going to be an interesting area. We're going to look at silver as well, because we had made a significant high back here, and if they fail to take that out, then we could see another decline. So we're going to watch this area pretty closely. But again, anytime we've seen gold drop below the 50-day, above the 200-day, and we get an MTPredictor pattern, Elliott wave pattern to go off of, those have been good buying opportunities for long-term investors in gold or silver. Again, here was a wave 2, major wave 2, below the 50-day, above the 200-day, good buying opportunity. Even in the TS4 there was a good buying opportunity there. This TS4 below the 50-day, above the 200-day, another great buying opportunity there. That was a nice DP with an ABC correction there that played to the downside there as well in gold. But for those long-term holders, that these have been good opportunities going back several years anyway now. Anytime we've had gold coming below the 50-day, above the 200-day with the MTPredictor signals or Elliott wave pattern there. So you can see that. So again, we just had that situation here. I do want to watch this, especially this resistance area here, which will begin right around the 1568.50 area in gold, and see how that reacts. If we don't get a new high, then it could be trouble, because we may end up falling short again. The wave 5, minimum wave 5 resistance is above that. It'll start around 1620. So that's another area we'll watch, 1620 area to 1620 to 1650-ish area in here. If we do come up, make new highs, and then perhaps a correction back to the wave 4 DP, probably back down around the 1440 area. We'll see. Take a peek at silver. Again, you can use those opportunities when gold goes below the 50-day, above the 200-day with a nice wave pattern to time your purchases in silver as well. You can see silver in the wave 4 support area, just kind of wiggling around that area here. It's gotten below its 50-day, above its 200-day, but silver is much more volatile and will violate its 200-day without really breaking the trend. So sometimes it's good to use gold. It's more predictable, and use that to time your silver purchases as well. So this wave 2 area was a nice area to purchase silver that coincided with the pullback in gold as well. Silver has been moving higher. It's right at its 50-day moving average now, which is acting as resistance. And again, in silver, we're going to have to watch the well, you've got a DP off the wave 3 here, but if we fall short of this area here, that would be a new high, which would be around $52. If we cannot get silver up to take out that $50 all-time highs, then again, we're going to have to watch out for the downside there, as we get a lower high and a potential for some good downside. So we're going to watch these. August, I think seasonally August for gold has been a good month, and so we'll see if the markets, both gold and silver, do try to make a next run up as we head into the fall, August into the fall, but watch if we fall short of new highs. All right, let's take a look then at some of the activity Friday from our trading room. Here's the S&P E-mini on the 15-minute chart, and I'm just going to show you how we've got this significant high back here. You can see this is where we've been trading the last week or so here in the S&Ps, around this 1330, 35 area. If I put a decision point on this DP swing back here, you see it gives us this resistance area. So what we know is if the market did come up into this area last week, we knew this was going to be an area of resistance. And also we can look at the prior swings here and put our decision points. Let me make this a little bigger here and put our support areas. We'll see if the market comes down into this area or the swing off of this low, which it's projected out here. And we'll see on Friday, on Thursday, the market had an outside gap up that wasn't able to fill, and the market drifted higher. Okay, right up near our decision point resistance. Okay, came within about half a tick. About half a point or so of our high there, and then boom, Friday we had an outside gap to the downside. Now here's our next You see our support level on the 15-minute chart was there way ahead of time, but we know if the market comes into this support area, we're going to be looking potentially for long setups on the probably on the 3 or 5 minute chart. And boom, right to the tick. I can make that bigger. Right to the tick. S&P came right down, so we'd be looking for potentially looking at the smaller time frames for longs. But early in the morning, we're actually looking for shorts. And the reason being, if we go to the 3 minute chart of the S&P here. Okay, so here was Thursday. Thursday, an outside gap up. They weren't able to fill the gap in the first half hour, so all you do is you're looking for longs because tendency is the market is going to drift higher the rest of the day, or the rest of the morning, sometimes the rest of the day, as it pretty much did on Thursday. So on any of these pullbacks was a good opportunity to get long. I got long the QQQs on Thursday and played those for about 2 to 1. And then Friday, the S&P had just the opposite. You can see we had an outside gap to the downside. So we had a gap down below Thursday's low. And all we do is we wait for a pullback to get short because all this selling pressure, our strong trend filter was telling us there is additional downside ahead. And the software gave us a short signal, the TS2 there, put the analysis on, which was very nice. Nice 3 to 1. Risk reward for that trade, and on a $350 risk, taking out $1,074 in profit. Again, you could have picked the NQ. I took the QQQs, but here was the S&P had an automatic trade set up on a neutral trend. Anybody could have played that in our trading room to the short side. Very nice. And then I showed you that support on the 15-minute chart in the ES. So let me just kind of take this analysis off. Let's kind of tighten up the chart. So our DP again, if I go to the 15-minute chart, you can see we came right down to that 15-minute DP. We got a blue buyer's bar there. We look at that same point in time, 10:15 Central Time. You can see 10:15 Central Time right here. We got an automatic decision point buy signal. The software gives us against the trend, but we have to expect that it's going to be against the bigger trend because this is telling us this may be the end of the downtrend, which is exactly what it was. This was the low of the day. The software caught the low of the day for a nice another 3R trade. So a total of 6R on 2 trades. Again, when we see the selling pressure where they can't fill the gap, we're only looking for shorts. We're going to ignore any buy signals until we come into some major support, which we did on the 15-minute chart here. So there was an opportunity to go long, potential end of trend, beginning of a new potential trend anyway, to the in the opposite direction, at least until we hit the next resistance point, which was our decision point here off this prior swing. And like I said, another 3R there, a risk of $350 with a payoff of about $1,050. So anyway, hope those are helpful. We'll take a look again at the markets next week and see what we've got. Interesting times and heading into earnings season as well. All right, have a good week, and we'll see you back next week.